Well, we talk about headline earnings per share dropping 41%, but of course you've got issues like restructuring to really consider here. So take us through the half year that was for the company.
Okay. Thank you and good afternoon. This was really the first year of the company's operation, in that it was exactly a year ago that it was listed on the stock exchange. So we don't have comparatives. The growth really came from the underlying investments. Discovery was out about 2 weeks ago and grew its earnings normalized basis by 20%. MMI was out yesterday, grew its earnings by 4%. And the star of this performance was OUTsurance, which produces about 40% of our earnings, which grew its normalized earnings by 54%. So really good growth from all three of the pillars on which the business rests. And that enabled us to pay a dividend up by 32%, so 30 cents a share for the interim period.
Certainly, speaking to traders and market watchers at the desk today, they're saying that, on the back of having seen Discovery's results and MMI's results, they're more interested in OUTsurance's performance, and then, of course, RMB Structured Insurance's performance as well. Let's start off with OUTsurance, because they recorded top-line growth of 17% and mostly benefiting from the Australian division. So run us through that Australian operation and the kind of strategy you're pursuing on that end, Peter.
Okay, the Australian operation has now been going since 2008. It's making very good progress. It currently has 250,000 policies in force, and at the moment we're selling more policies, or the same number of policies in Australia as we are in South Africa, where we've been going for 12 years. But of course, the risk profile of personal lines business in Australia is significantly different to South Africa. So our premium income from Australia on a policy-per-policy basis is about a third to a half of what it is in South Africa. We are very pleased with the way that it's performing at the moment. The loss between the two periods reduced from 150 million to about 86 million in the 6 months. And if we progress as we are at the moment, we anticipate that we'll get to monthly break-even in the 2013 financial year. So we're on track with our business plan, and we're very comforted with what we're achieving there. The claims ratios are in a downward trend as we gain scale, and we seem to be able to select risks that fit our profile and get the pricing right as well. So the business is progressing as we'd hoped.
Having said that, you're not sitting on your laurels here in South Africa. I mean, OUTsurance Life is gaining traction. So take us through that strategy, and if you're satisfied with the kind of performance that's coming through on that end, because that's something you can well leverage further off moving forward.
Yes, indeed. I mean, OUTsurance Life has two components in it: the credit life business, which is already profitable, and then the direct life insurance business, which we started 18 months ago. And there the position improved significantly, where we're now fast approaching break-even. I mean, the loss situation for the 6 months was only about 5 million rand. So it's in the right direction, and we believe that we should make progress with it in the next 6 months.
While that plays out on the OUTsurance side of things, RMB Structured Insurance profits are down by 2/3. The company is not given any reason here, but could you give us some reason, now as to why you're going down this route, because it would hint to trends in the larger market and what big business out there is actually doing?
Yeah, look, if you look at the results for the full year last year for RMBSI, we indicated that a significant part of its some 100 million profit that it made at that stage was as a result of the realization of a large equity portfolio that it held on behalf of one of its policyholders, and it had profited or shared in the profits of that. That obviously didn't reoccur in this period. The business is a relatively small business, and the profit that we reflected for the 6 months should be improved upon in the next 6 months. We anticipate that we should make between 20 and 30 million rand in the coming year from that business, which is still a fair return on the capital that we've got employed there.
Let's quickly, Peter, I'm going to squeeze this in because investors are pretty disappointed that there was no special dividend announced today. I mean, disappointing because of what Santam did last week. So your dividend policy moving forward?
Well, look, our dividend policy is predicated on the basis that we, after providing for the funding costs that we've got at the centre in RMI itself, and the cost of operating RMI, which is relatively immaterial, we pay our dividends that we get from the underlying businesses. And while all of the businesses are adequately capitalized, none of them really have capacity at the moment or envisage us paying special dividends. OUTsurance did increase its interim dividend by almost 100% from the prior year to try and normalize their dividend flow between first and second year periods. But I would suggest that a 32% dividend increase in the current market is actually very acceptable.